Good morning, everybody. It is Thursday, May 15th, and we are going to start our prep today for the equity indices, oil, and gold. First, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So, quick recap on some of our charts that we went through earlier this week. The S&P commercials are long. We are looking for distribution as they've been selling the last several weeks, and you guys can see that on our website if you go to the COT chart section and then look at the commercial bars. You'll see them ticking down. Dollar looking more for an upside push, and that has been what we've seen mostly for the last several days. We did see a down move yesterday, and that led to the euro and the yen with a nice push. But this is still signaling that commercials are going to want to push on the dollar to make the markets give them an area for liquidity. And then we can see the same thing with Bitcoin. We're still looking for that new all-time high, but we had that big push last week, and we'll look for that to continue. On to our credit spreads. We are seeing our spread widening, but we do want to be mindful of if the high yield gets over 3.5. That is typically when we start to see pullbacks in the market. So this down move has been one of the fastest we've seen in years, and we're just going to be watching for any signs of turning there. Just like on the VIX, we had the biggest collapse, fastest collapse in volatility. That is great in rallying the markets, but once a rubber band gets stretched too far, it will pull back, and that's what we're going to watch for as well on multi-asset volatility is our VIX and Vixen for the Nasdaq and RVX for Russell to begin to show signs of support. If we get down to 1629 to 17 on the VIX, that's kind of our key level. That's what we're going to be watching for a top in the market if we can get down there. Yesterday we got down to 1760, or on Tuesday, sorry, we got down to 1760, and now we're pushing back up towards that 20 mark. And on to bond volatility, we talked about this the other day. We are coming into where bonds typically start to see more volatility. They get too complacent, which is where we're at. And then we see that spike, which will go through to the equity indices. So this move up is starting to run out of steam or showing signs of exhaustion. We're not quite there yet. There are some internal signs, and we'll get into a couple of those, but mostly our students get the full read on all of them. As we come into PPI and retail sales this morning that come out in the next hour, and then we have PAL just over an hour from now at 8:40. Nobody has insurance. Nobody has protection. So this tells us that there's not the fuel for the big upside push. There's also not uh, the setup is giving us no floor and no big setup for the push. There's not that big insurance play, so this opens the door for downside or a more muted move. And so we have had the move down in the overnight, but we haven't seen insurance coming in, and this brings a little bit of risk to those data points this morning. And our systematics again still are going to be on the sidelines until mid to late June at the earliest. So nothing really worth uh, noting here. The flows are going to be very small and not really give us much of an edge. Now, once we get to July, then we will see this group really begin returning more in full force. So yesterday we did put out some levels for our students or for our subscribers that did ask for them. We did a live prep for our students, so we weren't able to get a video out. But we gave you the key levels. High a day was our upper rotational zone. And then we told you 58.88 to 91 was going to be your key level, and that was low of day yesterday. So we came right up to our upper rotational zone and then right back down to that 91. So you had chances at longs at 91, chances at shorts at that upper rotational as you look for that smaller rotational price action. So today on the ES, we are looking for rotational price action if we stay between 58.60 3/4 and 59.26. We are over our line in the sand, you can see here, which is below our lower expectations on the day. And our pivot today is at 58.93. If we get over our rotational high, we look for 59, 58 half, and 78. And if we break our rotational low, we'll look for 58.28 and 08. Other key levels today that we want to pay attention to: 59.36, 58.96, 58.61/4, and 58.48. Now for NQ, we are looking for rotational price action from 21.447 to 21.113 with our pivot at 21.277, which is about where we are right now. We are over our line in the sand firmly, which is down at 20,678 still. And our upper targets will be 21,614 to 21,714. And our lowers will be 20,846 to 20,945/4. Other key levels to pay attention to on the NQ: 21,549 half, 21,436, 21,289, 21,174, and 21,107. Now, the 21,436 is one of the ones that, or 431 is what we put out yesterday. That has moved up to 436, but you can see that was our high of day yesterday. So you could have taken the long at the rotational high up there. You're better off once we get over that rotational looking for more directional moves. So we would be looking to buy in this blue and then sell at our key level, looking for any pushes that could go higher. We had that big level at 431 yesterday. Now that's 436 today. But that's going to be your big area that we have to continue over to see that trending price action if we get over our rotational high. Now on to oil. So on the crude setup here, bigger picture, we are stuck between our 55 and 64. Every time we've come down to that 55, we've mentioned that before, that's your buy zone. And then we are stuck at 64. Now we are coming down to our line in the sand at the moment, but our rotational zone, we're just below it. So rotational is 63.25 on the top end to 61.19 on the bottom. So we're just under that now, looking for more directional price action then. Our pivot is 62.22, and our lower targets are 59.54 and 60.16. And then on to gold. We are looking rotational if we stay over 31.62.6 up to 32.31 half, with our pivot at 31.97.1. If we break our rotational low, we'll look for 3107.6 to 3128.2, and two other key levels for you today on gold: 3211.9 and 3182.4. So that's going to give you all the levels to look at for today. Other factors that you want to be paying attention to in terms of catalysts and on the calendar are OPEX is tomorrow, so the business cycle ends. And then that'll lead us into the month-end business cycle. And again, we have Powell today, retail sales, PPI, and jobless claims. And we always want to be cautious on any signs that show up on the calendar of Trump speaking, the White House press secretary, Leavitt, Bessent, any of the market movers in the White House, anybody that might have something to say, we want to be aware of that they may come out onto the calendar. So we have Trump at 9:15 today, and it looks like he's just added in one at 11:40 today as well. So those are going to be key areas to be paying attention to as we will watch our insurance throughout for if insurance buying comes in to give us a signal for an upside move. And if it doesn't, the potential for downside. But remember to watch these catalysts and how they can affect your trades and your price action. And as always, guys, make sure to control your risk. Have a great day, and we will be back again next week.